Trend reversals seem almost impossible to predict until you realize you're looking at them wrong. These three reversal trading concepts will shift your entire perspective, and those random reversals will make much more sense, helping you profit from moves other traders miss. But alright, so before we can start trading trend reversals more effectively to make money, we of course first need to know what a trend reversal is in the first place and what is trend reversal trading. Well, a trend reversal happens when price changes direction, so from uptrend to downtrend, or the opposite, so from downtrend to uptrend. And what is very important here is that a trend reversal is different from a pullback. A pullback is a brief stop in an existing trend. So when we have a trend, we have impulsive move, pullback, impulsive move, pullback, impulsive move. So this right here are pullbacks and not complete trend reversals. And this is an important difference. But now, why is it so hard to spot these reversals? Well, one of the main factors is that you are actually going against the momentum and you are going against the trend, right? But when you do this right, it allows for very high reward trade, because imagine if you manage to buy, let's say you buy down here, now my camera is a bit away, but if you manage to buy the low all the way down here, that can of course lead to insane reward profiles, but that is also what makes it so hard. But now, why does trend reversal matter? Well, spotting reversals help you exit earlier, catch new trends earlier, and also avoid getting stuck on the wrong side of the market. But right, so now let's start talking about the three concepts you need to learn about in order to master trend reversal trading. And one of the most important concepts you need to learn about is something called price action. And this is a concept that I would say most traders actually misunderstand. So let's talk a little bit about what is price action. Well, price action is all about observing how the price moves in real time, and especially how the price moves, when we are getting close to important zones or important points on the chart. So price action basically reveals the story of buyers and sellers. So when we study price action, we study, how strong or weak is a move. Do we see hesitation, or do we maybe see exhaustion? Your ability to understand price action is one of the most important concepts. So some key observations about price action is that you can, for example, study how the price reacts to support and resistance. So remember here, price action is not about how we draw our support and resistance levels, but it's more about how the price reacts to the support and resistance levels. So do we have multiple reactions? Do we have wicks? Do we have aggressive price movement? Or do we see hesitation, and so on and so on? But alright, so now to show you guys an example of price action, let me actually draw out a support level right here on the screen, and let's actually split this support level into two screens, because I want to show you guys why price action is so important. So let's imagine that here to the left we have the price here. These are red candles, so we see red candles here coming in to the support, but then we see a candle that looks something like this. This candle, by studying the price action of this candle, we can see that when the price reached the support level, we actually saw lots of buyers stepping in, or in other words, we can see that the sellers actually hesitated a lot in breaking this level. This is also what we call a hammer candlestick pattern. So this right here is a hammer, which is a bullish pattern. We will talk about that soon. But what I now just want to mention is that this is a very different price action compared to if the price looked like this. If our third candle looked like this instead, as you can see, the lows here of the candles are at the same level, or that was what I tried to do. But in this case, we can see that how the price moves. In this case, the price moved below the support in a very aggressive and strong manner, while in this case, the price briefly dipped below the support, but then quickly the buyers gain control and push the price up. So in these two examples, it's very different price action, and that is what I try to show with this example. So some other things you need to study here is breakouts and fakeouts. This right here is a super important concept as well. So a breakout that quickly fails, meaning that price breaks a level and then reverses, often signals a trend weakness or even a trend reversal. And by the way, if you want to learn more about breakouts, I do have a full video about breakouts. I highly recommend checking that one out, and I will make sure to link that video both up in the video card as well as the description below. The next thing you need to study is candlestick signals. For example, we have bullish and bearish engulfing patterns. We have hammers. What I recently showed you guys was an example. That was a hammer, which is a bullish reversal pattern indicating a reversal from downtrend to uptrend. We also have, dojis and much more. And once again, I do have a video. I do have a full 2-hour-long course on candlestick signals and candlestick patterns. So when you have the time, I definitely recommend to check that one out as well. But we also have, other kinds of reversal patterns like chart patterns. So we're talking about things like double bottoms, head and shoulders, and many other chart patterns as well. But here, the key takeaway here is that price action is not about drawing the correct levels. Price action is about how the price is reacting to our levels. And this leads to our next key concept. All right, so here, our next key concept is market structure. This is the blueprint of a trend. So first of all, what is market structure? Well, market structure refers to the overall framework of the, basically of the market. So how has the price reacted in the past? I like to compare price action and market structure with that. If you imagine you are drawing, let's say you're using your finger to draw a line in sand, then the price action would be how your hand moves. So is your hand moving, fast or slow? While market structure is this whole trace that that is in the sand after your hand has been drawing. I hope this makes sense. If it doesn't make sense, don't worry, we will talk more about it. But here, market structure helps you define whether a trend is still valid or if we're seeing signs of a shift in the trend. So here, some key concepts of market structure is of course uptrend. This is when we are printing higher highs and higher lows. We have the downtrend. This is when we're printing lower highs and lower lows. And two important concepts that are very important to learn about is break of structure and change of character. A break of structure is simply when we break to a new high in an existing trend, while a change of character is when we break below the low in an existing trend. So let me actually jump into TradingView and try to show you guys this really quickly. All right, so right here we are in TradingView and we are currently looking at Ethereum on a daily time frame. As you can see, as I'm recording this video, we have been seeing a massive rally in Ethereum lately, so that is very good to see. But now I actually want to focus on the break of structure and change of character. So first of all, let's actually take a look at this downtrend right here because it's such a clean downtrend. It started around here with this impulsive move towards the downside. Then you can see that the price pulled back, or in other words, we saw a bounce. Then we saw another move towards the downside. And this point, when we break to a new low, is what we call a break of structure. So you can see, once again, we push higher, then we break below. This right here is another break of structure. And this goes on, every impulsive move and pullback. But a concept that is even more important when it comes to reversal trading is something called a change of character. And a change of character is when we break above, at least in the case of a downtrend, right, when we break above the last high that led to a break of structure, this right here is our change of character. And this indicates a reversal to the upside. Super important. And by the way, if I went over this too quickly, don't worry, because I do have a full smart money concepts training course where you will learn everything you need to know about breakout structure and smart money market structure. And I will make sure to, of course, link that video both up in the video card as well as in the description below. But for now, this is all you need to know. And here I can also just mention that many classic reversal patterns, like, chart patterns such as the double top slash bottom and the head and shoulders and inverse head and shoulders, actually are built on these breakout structure and change of character concepts. Or in other words, you can find change of characters in, for example, double bottoms and head and shoulders. But here, market structure tells you when a trend officially breaks. So by having these clear rules like break of structure and change of character, but there are other rules as well. And some, many traders have slightly different frameworks on exactly how they define trends. And I'm not saying one is better than the other, but it is important that if you have clear rules, you don't have to guess, are we in an uptrend or are we in a downtrend? So it's this is very important to learn. All right, so now concept 3 I want to talk about is momentum indicators. These can be super useful for spotting reversals. And for me, especially, I do have a favorite method to use momentum indicators, and I will soon reveal that. But first, let's talk a little bit about indicators. So indicators can basically help confirm what price action and structure are suggesting. So I always recommend to first learn about market structure and price action before you start using indicators, because they are more used as supporting evidence and not as the main signal. So usually these are like the icing on the cake rather than the main signal, if that makes sense. But some traders, focus on purely indicators, and some traders do that successfully. But this is at least what I recommend. So 2 indicators we have. Let's quickly go over them. We have, for example, the relative strength index, which measures buy and sell momentum on a scale 0 to 100. When the RSI is above 70, it's overbought. When it's below 30, it's oversold. And this some traders use as a clear sign of reversals. But personally, I definitely prefer to use divergences. And a divergence is when the price goes in one direction and the indicator goes in the opposite direction. And this indicates a potential reversal. And don't worry, I will show you guys on the chart soon. But I can already mention that, yes, I do have a full RSI trading course as well. And I will make sure to link that course right here in the description and the video card. The next momentum indicator I want to quickly just mention is the MACD. I really like the MACD. It's, once again, it measures momentum, and we can use things like crossovers. I'm not the biggest fan of crossovers because, once again, I do prefer the MACD divergence. And the divergence is like hidden weaknesses that if we combine it with, for example, price action and market structure, we can improve our win rate and as a result, make more money. But right, so now let's jump back in TradingView and try to bring this all together. And what I also forgot to mention earlier is that if you for some reason haven't gotten started with TradingView yet, I do have a special link. You can use that link to get TradingView Premium for free for 30 days, and you will also get a $15 bonus if you later on decide that you want to continue with the paid plan. But that is, of course, up to you. Feel free to only use the trial if you want to. But now let's actually take a look at how we can combine these different factors. So first of all, remember the break of structure. Let me actually use another color. First of all, remember the break of structure and change of character we talked about earlier. The change of character happened at this point right here. So this right here is our first reversal signal. But what you also can see, and which is very important, is that when this break of structure happened, you can see when we broke this high right here, we actually saw a massive, massive bullish candle. And this is actually the price action we're looking out for. We're not only seeing a trend reversal, but when the reversal happens, we're seeing a very, very strong candle. And let's actually see one indicator I like to combine with this is volume. So let's open up a simple volume indicator in TradingView, and hopefully we saw increased volume. Yes, we did see that. As you can see on the volume bar, we saw much higher volume on this candle. So when we do a change of character, sorry, misspoke a bit, but when we do a change of character, we want to look out for price action signals like a strong momentum candle, like more volume, and this we actually saw in this example. Now, to bring it all together, let's also actually open up a momentum indicator. And as I said, both the RSI and the MACD are great momentum indicators. I personally, if I can only choose one, I would choose the MACD. But let's open up the MACD right here. And now what I want you to realize is that with these last two lows, you can see the price printed one low and then a lower low. So one low, lower low. But if you look at the MACD, right, you can see that the MACD prints one low and then a higher low. This right here is what we call a bullish divergence and also indicates a reversal to the upside. So following the framework, we did have a market structure signal, we did have a price action signal, and we even got the icing on the cake with the momentum indicators. So we had multiple signals happening at the same time, suggesting a reversal. And after this, we can see that the price have completely, started to explode towards the upside. Ethereum right now trading at, almost 4,000. So very nice to see. But alright guys, so in order to master reversals, you need to really learn about price action. So now I highly recommend to check out this course on price action next.